Are markets going to bounce from here, or do we have to go through another crash cycle? I'll show you in the next 2 minutes. Hi, I'm Doc Severson with ReadySetTrade. Welcome to today's Market Minute for Tuesday, the 7th of June. Here's the S&P 500 daily chart. This has been in a primary downtrend with lower highs and lower lows, lower highs, lower lows, lower highs, and lower lows all the way from early April until the latter part of May. Now, what happened into the Memorial Day holiday was significant because we came from a lower low up to a higher high. If you consider this to be a lower high, then we have now printed on the S&P a higher high relative to that lower high. This is significant because it implies that the next low should be a higher low, wherever that is. So whether it's in the flag pattern or lower than that, the next low should be a higher low. Now from there, we'll see what happens, whether or not it wants to break to a higher high or breaks to a lower high. And this whole thing becomes a larger time frame lower high. But I don't want to get ahead of ourselves. We need to focus on this pattern right now. Now, this pattern that we've been in for the last week is really just a bull flag or horizontal flag pattern that it's been in. And this is typically a bullish consolidation pattern. So the expectation is that we break out from here higher in price. However, this has not been easy because every time the price tries to break out, in this case above 4,200, it's being rejected back to the bottom of the flag range again. So if the price cannot break out of the flag pattern on its own, then what it will need to do is drop into the higher low. We can come up with targets for this if we apply fib retracements from the bottom of the move up to the top of the move. And we can see that a great target for this would be the confluence of the 38.2% retracement, as well as this gray box here, which represents a gap that was created on the Friday into Memorial Day. So again, if the price cannot break out on its own, what it will have to do is drop to find a new bid. And to me, the best place for that to occur is going to be right around the 40-50 area on the S&Ps, which would be a gap fill as well as a test of that 38.2% retracement. If we end up closing, if the price closes below 39.50, which is the 61.8% retracement, then the probabilities do exist for a full retest of the lows from late May. So in the meantime, watch the 40-50 level for support, and let's see if that creates the higher low, which leads to higher prices. In any case, I think we're going to have difficulty getting through 4,300 on the first try. That's it for today's Market Minute. See you in the next one.